Have you ever wondered how the rich keep getting richer while others struggle to make ends meet? It's a question that has baffled many, but the answer is deceptively simple. The wealthy aren't just earning money, they're growing it. One of the most potent tools they use? Investing. Investing is like planting a seed today to reap the fruits tomorrow. It's a way to put your money to work, to multiply it, to create wealth beyond the confines of a 9-to-5 job. But it's not just about throwing your money into any venture that promises high returns. It's about strategic planning and informed decision-making. It's about understanding trends, recognizing opportunities, and taking calculated risks. Let's look at a couple of the world's most successful investors, Warren Buffett and Elon Musk. They didn't just stumble upon their fortunes by chance. They meticulously studied their fields of interest, made informed decisions, and patiently waited for their investments to grow. Warren Buffett, the Oracle of Omaha, is known for his long-term investment strategy. He's not one for quick, risky gains. Instead, he invests in companies he believes in, companies with potential for growth and sustainability. It's a slow and steady approach, but it's one that's turned him into one of the wealthiest people in the world. Then there's Elon Musk, a man who's not afraid to invest in the future. His investments in companies like Tesla and SpaceX might have seemed risky at the time, but they're now at the forefront of technological innovation, reaping massive profits. But here's the thing, investing isn't exclusive to the likes of Buffett and Musk. It's a tool that's available to anyone willing to learn and put in the effort. Yet without the right knowledge and techniques, investing can be like navigating through a maze in the dark. It's not just about having the money to invest, it's about knowing where and when to invest it. So how do you acquire this knowledge? How do you learn to navigate the investment maze? That's what we'll be exploring in the next few scenes, because, remember, every wealthy investor has a secret, and that secret is, more often than not, a well-informed strategy. Without the right knowledge and techniques, investing can be like navigating through a maze in the dark. To invest wisely, one must first understand the basics of investing. Let's start with stocks and bonds. Stocks represent ownership in a company, giving you a claim on part of the company's assets and earnings. On the other hand, bonds are like loans made to large organizations. When you buy a bond, you're essentially lending money to the issuer in exchange for periodic interest payments and the return of the bond's face value when it matures. Now, let's talk about ROI, or return on investment. Simply put, it's a measure of the gain or loss made from an investment relative to the amount of money invested. It's usually expressed as a percentage and is used to compare the efficiency of different investments. Lastly, we have risk tolerance. It's the degree of variability in investment returns that an investor is willing to withstand. Understanding these concepts forms the foundation for making informed investment decisions. With so many investment options available, how do you decide where to put your hard-earned money? This is a question that plagues many, from those just dipping their toes into the investment pool to seasoned veterans of the financial world. The first rule of thumb is diversification. It's the investment equivalent of not putting all your eggs in one basket. Instead of focusing all your resources on a single investment, spread it out over a variety of options: stocks, bonds, real estate, or even cryptocurrency. This way, if one investment doesn't perform well, your other investments can help balance out the loss. Next, it's crucial to understand market trends. It's like catching a wave while surfing. You need to know when to ride the wave and when to get off. This requires a keen eye for detail, a good understanding of the economic landscape, and a bit of intuition. For instance, if you had invested in technology companies during the dot-com boom of the late 90s, you could have made a fortune. However, those who didn't pay attention to market trends and stayed invested during the subsequent crash suffered significant losses. Thorough research before investing is another key aspect. Don't just follow the herd. Take the time to understand the potential investment's business model, its competitive landscape, financial health, and future growth prospects. Consider the case of Warren Buffett, one of the world's most successful investors. He is known for his meticulous research and his strategy of investing in companies he understands and believes in. Finally, don't forget to learn from the successes and failures of others. Many successful investors like Ray Dalio and Charlie Munger have shared their investment strategies and philosophies. Their insights can provide valuable lessons and help you avoid common pitfalls. Remember, the goal is not to put all your eggs in one basket, but to spread them out to minimize risk and maximize returns. Investing is not a get-rich-quick scheme, but a journey that requires patience, knowledge, and a well-thought-out strategy. One of the most talked about investment options today is cryptocurrency. But what exactly is it, and how does it work? Let's break it down. Cryptocurrencies like Bitcoin are digital or virtual currencies that use cryptography for security. This makes them nearly impossible to counterfeit or double spend. They operate independently of a central bank, meaning they're decentralized. Transactions are made with no middlemen, which means no banks. Bitcoin, the first and most well-known cryptocurrency, was created in 2009, opening the doors to a new era of digital currencies. It's built on a technology called blockchain, a digital ledger where all transactions made are recorded and open to the public. It's this transparency that adds an extra layer of security. Now let's talk about investing in cryptocurrencies. The potential for high returns is the main draw. Bitcoin, for instance, was worth less than a cent when it was first launched. Today a single Bitcoin is worth thousands of dollars. That's quite the growth, isn't it? But remember, with high reward comes high risk. Cryptocurrency markets are notoriously volatile. Prices can skyrocket one day and plummet the next. This is not an investment for the faint-hearted or risk-averse. And then there are regulatory risks. Cryptocurrencies are still a relatively new phenomenon, and regulatory frameworks around the world are still developing. This could potentially impact their value and usability in the future. Moreover, the lack of consumer protection is another concern. If a cryptocurrency exchange is hacked, or your digital wallet is compromised, you could lose all your investments. There's no safety net like the one that exists for traditional banking customers. Despite these risks, the allure of cryptocurrencies is undeniable. They offer a new way of transferring funds, have the potential for high returns, and are a hot topic of conversation. But, as with any investment, it's important to do your homework and understand what you're getting into. Investing in cryptocurrencies can be a game changer, but it's not without its risks. So tread carefully and remember to diversify your investment portfolio. It's not all about Bitcoin after all. What can we learn from successful investors like Warren Buffett and Elon Musk? Well, quite a bit, as it turns out. These titans of investing, with their unique strategies and principles, have much to teach us about the intricate dance of investing. Let's start with Warren Buffett, the Oracle of Omaha. His approach is deceptively simple: buy and hold. This means investing in companies that you believe in, that you understand, and then holding on to those investments for the long haul. It's not about chasing the hot stock of the moment or trying to time the market. It's about having the patience and conviction to stick with your investments even when the market is in turmoil. Buffett also emphasizes the importance of value investing. This means looking for companies that are undervalued by the market, those hidden gems that others may have overlooked. It's about digging deep, doing your homework, and finding those opportunities that others may have missed. It's not about taking shortcuts or looking for quick wins. It's about the slow and steady accumulation of wealth. Now let's turn to Elon Musk. His approach is quite different from Buffett's. Musk is a visionary, a risk taker. He's not afraid to invest in new and unproven technologies, to bet on the future. His investments in companies like Tesla and SpaceX are testament to his forward-thinking approach. While this strategy comes with its own set of risks, it also has the potential for astronomical returns. Musk also emphasizes the importance of thinking differently, of not following the crowd. Like Buffett, he makes his own informed decisions, based on his own research and understanding. This means not being swayed by market trends or popular opinion. It's about having the courage to go against the grain, to chart your own course. So, what's the takeaway here? Well, it's that there's no one-size-fits-all approach to investing. It's about finding a strategy that aligns with your own risk tolerance, your own goals, your own understanding of the market. It's about being patient, doing your homework, and not being afraid to think differently. Learning from the greats can provide valuable insights into the art of investing. And perhaps more importantly, it can inspire us to become great investors ourselves. Let's recap what we've discussed today. The wealthy investor's secret lies not in a hidden formula, but in understanding the basics. Grasping the fundamental principles of investing, such as the importance of diversification and the power of compound interest, is the foundation on which successful portfolios are built. When deciding where to invest, thorough research is crucial. Whether it's traditional stocks or the burgeoning world of cryptocurrencies, understanding the market trends and dynamics can make the difference between a profitable investment and a costly mistake. We've also touched on the crypto revolution, illuminating the workings of Bitcoin and other digital currencies. These present unique opportunities and challenges, underscoring the importance of staying informed in this fast-paced financial landscape. Lastly, we've gleaned insights from the investment strategies of the greats. Their experiences remind us that patience, discipline, and resilience can pave the way to financial success. Investing wisely can be the key to financial freedom and wealth accumulation. Remember, knowledge is power.